Ever feel like you're caught in some kind of tech finance, jazz, improv session? This whirlwind of new terms, new apps, digital assets flying everywhere, and you're just there trying to figure out if your wallet's still actually in your pocket. It's constant, dizzying almost. Every other week seems like there's another app, another crypto thing, some new AI promising to, change your life, make you rich, or at least help you order pizza faster. You keep hearing, it's a future, it's innovation. Nothing like it.
Oh, absolutely. The hype machine is definitely working overtime. It's just this constant bombardment, isn't it? Promises of ultimate convenience, seamless everything, instant opportunity just waiting for you. But, for a lot of people, especially if you're just trying to manage your day-to-day money, it just adds to the noise, the overload. You end up with what? More apps, more passwords you can't remember, more notifications pinging, and sometimes, even more debt. All while the supposed revolution is maybe quietly benefiting someone else entirely.
Exactly. That's the paradox, right? This feeling that, innovation promises a lot, but sometimes, honestly, this feels kind of boring. Or worse, it feels like the same old problems, just dressed up differently. Higher stakes, maybe. Slicker interface, sure. But still the same underlying issues. It's like getting these super expensive new headphones, but they're just playing the same tired old song on repeat. Yeah. So that's why today here at the Deep Dive, we're going to try and cut through all that. Our mission, really, is to take this pile of sources. We've got everything from Reddit rants to actual Homeland Security analysis and pull out what really matters. Yeah. We want to look at the actual, the raw impact of AI, new payment systems, digital assets, especially on your finances, your reality. No sugarcoating, just, real talk. And maybe calling out some of the BS when we see it.
And the range of sources we're using for this deep dive is pretty key. I think we've pulled stuff from all over the digital map. We've got these fascinating threads from Reddit about, believe it or not, cultural stagnation, which mirrors more than just music, turns out. Then there's expert analysis on global payment trends from the Sigma World Report. And some really deep unclassified dives into cyber fraud, financial crime, straight from Homeland Security. And looking at them together lets you see how these things that seem totally separate, pop culture, national security, finance, they're actually all tangled up. They're all shaping the financial world you're trying to navigate every single day.
Absolutely. Because look, whether you're a bus driver saving for retirement, maybe you're a musician figuring out streaming royalties, or an intelligence analyst trying to stay ahead of cyber threats, maybe a forklift operator just managing your paycheck week to week, or, hey, a single career woman with a side hustle trying to build something. This stuff. It impacts your daily grind. It impacts your long-term financial health. We've got the scoop from, like you said, Reddit rants all the way to top secret analysis, because this isn't just for the tech bros or the Wall Street types. This is for you. Mm-hmm. So let's unpack this thing. Okay, let's kick off with something that might seem a little weird for a finance deep dive, but trust me, it works as a perfect analogy for what's happening with digital payments. We're going to talk about music. Specifically, that Reddit post, remember, 2025 in Billboard is so boring. People were, let's just say, not happy, complaining how the music charts are just stuck, stagnant. You got songs like, Teddy Swims' Lose Control, #1 for over a year. Radio stations just playing the same old stuff over and over. And then these album bombs from artists like Morgan Wallen just kind of swamped everything for months. No room for anything new.
It is a really striking parallel, isn't it? And frankly, a bit disturbing when you look at the numbers from that thread. It wasn't just opinions. The data showed the average song on the Billboard Hot 100 around mid-2025 had been on the chart for, get this, 17.43 weeks. That's the highest non-holiday average ever. Compare that to, say, the mid-60s. The average was just over 4 weeks, 4.47 weeks. And this stagnation, it's not because there isn't new music. It's systemic. You've got radio just refusing to play anything unless it's already a massive streaming hit from someone they know sells. And the streaming metrics themselves, they just keep popular songs floating forever because every single listen counts, right? Every replay keeps it on the chart. So it creates this feedback loop. The top just stays the top. And it makes it incredibly hard for anything genuinely new, any new artists or sounds, to actually break through and find listeners.
Right. It's like that band stuck playing the greatest hits, not because they can't write new songs, but because the whole system is set up to just recycle the familiar stuff. Mm-hmm. And the audience is almost forced to listen to it over and over, whether they actually like it or not. So is this stagnation just a music thing, or is it a symptom of something bigger, something deeper running through our whole digital economy? Because when you look at some of these new tech solutions in finance, they often feel less like real breakthroughs, don't they? More like, I don't know, expensive distractions. Or just flexing, showing off tech instead of actually innovating. Like putting a shinier speaker on that same old boring song. It kind of leaves you asking, okay, who's actually winning here? And who's just stuck listening to the same track again?
That's a really crucial point. And if we connect this back to the bigger picture, that Sigma World report on the future of payments, it talks all about this perceived evolution. You know, how payment systems have shifted massively since, like, the 50s, from physical cards to online, mobile, contactless, all that. Yeah. Consumers, businesses, everyone's demanding simplicity, right? Effortlessness. Payments anywhere, anytime. Now, on the surface, yeah, that sounds like amazing progress, streamlining everything. But it's definitely worth asking, rigorously examining whether it's truly helping your financial well-being, or is it just making existing business models smoother for the big players?
And yeah, on the surface, it promises a ton. Like these super apps we're seeing, like WeChat. They're designed for what they call the hybrid customer. Right. So think about it. Maybe you're a freelancer juggling different clients, or a small business owner with multiple income streams, or even just, a parent managing the family budget, plus a side gig. These apps, they aim to combine all your needs, business, personal, under one roof. One service, one card, one ID. Supposedly smoother transactions. Sounds great, doesn't it? Convenience nirvana. Imagine, like your bus pass, your coffee points, your payment methods, your ID check, all just one seamless thing on your phone. For, say, that millennial tradie who's always on the move, or the single career woman running her side hustle. Yeah, the promise is really attractive.
It is. And the pandemic, well, it definitely poured gasoline on the fire for contactless payments, even for big purchases, which in turn drives this need for more secure biometrics, right? Face ID, fingerprints, instead of just punching in a PIN. The convenience of just tapping your phone or watch for, everything from coffee to maybe even a car. It's hard to deny. And the report also digs into the expansion of tokenized payments, basically virtual cards, digital wallets moving into new areas, like home deliveries, or even these multimodal subscriptions. Picture one subscription covering your train, your ride shares, maybe even your weekly coffee fix, all managed in one app. It's all designed to make the customer experience smoother, less friction. And then there's open banking, which is, opening doors for direct account-to-account payments. Supposedly giving you more choice by letting third-party services access your bank data with permission, of course, to offer new stuff.
Okay, so all these promises, they sound fantastic, like this seamless digital dream. Smooth jazz, right?
Yeah.
But here's where we got to pull back the curtain a bit. Talk about the subtle traps, the hidden costs, and, let's be honest, the uncomfortable truth about who really benefits from all this quote-unquote convenience and innovation. Let's take buy now, pay later. BNPL, it's everywhere now, right? Seamlessly built into online checkouts. And it is genuinely shaking up traditional credit cards. It offers what feels like an interest-free loan right when you buy something.
Yeah, BNPL is a really significant shift. It looks incredibly attractive, doesn't it? Especially compared to traditional credit cards, particularly for, younger folks, Gen Z maybe, who are a bit wary of old school credit lines or just prefer a different way to manage payments.
Exactly. And if you're listening in Australia, BNPL isn't just like a fad. It's practically a lifestyle down there. Gen Z Aussies are literally ditching credit cards for BNPL, using it for everyday stuff. But here's the question. Is this actual financial freedom? Or is it just debt in a prettier package? A different colored pill? Maybe, but still keeping you plugged into the matrix. See, the key thing here is that BNPL, while it seems like freedom, it often operates with fewer consumer protections than your standard credit card. It's stealth credit, really. You're still making payments. You can still get hit with late fees that add up fast. And it doesn't always have the same regulatory oversight, requiring clear info about interest rates or detailed credit reporting. It kind of subtly hooks people into a new kind of financial chain. Makes it a potentially expensive distraction if you're not super careful with it.
It's that perception versus reality thing again, isn't it? And beyond BNPL, you see this closed-loop processing growing, where the big tech players, Facebook, Apple, Google, are buying up merchant services like crazy. This lets them do app-based contactless payments without needing extra hardware. Basically, they're building their own little payment universes. What that means is they're not just facilitating payments anymore. They're becoming the whole infrastructure, controlling the transaction data, future services, everything. They're creating these walled gardens, right, where they make the rules, maybe limit competition, and hoover up massive amounts of data about what you buy, when, where, giving them this incredible insight into your habits. And you see it globally, too. Alipay, WeChat Pay getting integrated everywhere, extending these closed loops worldwide.
So basically, these giants are building their own mini financial kingdoms, acting like the bouncers at the digital jazz lounge, controlling who gets in, controlling the flow of money and the flow of data. And then you throw in the huge rise In remote work, this truly global workforce, there's this massive demand for payment mobility, this idea that money should follow people, not the other way around. It all sounds so liberating, doesn't it? Like your money's finally free, no borders, no physical ties.
But it really brings up that critical question. When we talk about convenience, when we talk about innovation in payments, who is it convenient for? Whose innovation is it, really? Is it genuinely for your financial freedom? Or is it just laying the groundwork for new kinds of control, new levels of data harvesting we haven't even imagined yet? Because every tap, every transaction, every Face ID scan, it's another data point. For that millennial tradie used to a simple paycheck or the forklift operator relying on direct deposit, understanding these subtle shifts is really key. It's not just about how you spend your money, it's about the mechanics underneath, how it moves, who profits from that movement, and what info about you gets collected along the way. It's kind of the ultimate big data, small minds situation. Not that you, the listener, are small-minded, obviously. But the systems are designed to collect so much data, it's almost impossible for any one person to grasp the full implications of what's being taken.
Okay, all right, here's where it gets really interesting. And, potentially pretty terrifying. AI, artificial intelligence. We hear about it constantly, right? Saving lives, running factories, making art, heck, probably writing podcast scripts somewhere. The AI optimists, they'll paint this picture of a glorious future, all sunshine and efficiency. But let's be real, AI is a general-purpose tool. At its core, it's about using computers, massive data sets, complex instructions to do stuff that usually needs human smarts, like reasoning, learning, making decisions. And like any really powerful tool, it's got a dark side, a serious dark side. It's like AI became the ultimate jazz virtuoso. Yeah, it can create something beautiful and complex, or it can hit you with this perfectly timed, totally discordant scam that just empties your bank account before you know what hit you.
The legitimate benefits are, they're undeniably huge, transformative even.
Yeah.
Businesses in pretty much every industry are scrambling to use AI, right? Streamline things, boost productivity, create whole new services. In finance specifically, AI is already revolutionizing legitimate fraud detection, helping banks spot and stop dodgy transactions in real time, which protects consumers. That's good. It's enabling hyper-personalized financial advice where AI can look at your spending, your income, your goals, and give you tailored recommendations. Algorithmic trading, credit scoring, even customer service bots. They're all getting faster, more precise thanks to AI. We've definitely seen huge growth in AI and machine learning being used for good, positive things, predicting market trends, optimizing logistics for, say, that factory worker you mentioned.
Right. The optimists paint that picture of limitless good. But here's the flip side. The advances in AI haven't just helped businesses. They've also given fraudsters a massive upgrade, generative AI especially. It's totally changed the game for cyber financial crime. It's made really sophisticated fraud accessible to, and this is quote, people of all ages and locations, often with little effort.
That is the stark reality. AI can now write incredibly complex, malicious code. It can adapt that code on the fly to get around new security measures, and it can craft phishing emails that are, well, astonishingly convincing. These aren't the emails you used to get, riddled with spelling mistakes and bad grammar. AI can generate text that's virtually indistinguishable from a real human, perfectly tailored to you or your company, designed specifically to fool spam filters and even experienced people. And it lets criminals launch attacks on a much larger scale, with incredible speed and precision. It basically lowers the bar, making high-quality scams available to way more criminals, even if they don't have deep technical skills themselves. The sheer scalability of the deception, that's what's truly alarming.
And that leads us straight into this whole illusion of reality thing. Deepfakes, impersonation scams. This isn't just sci-fi anymore, it's happening now. One of the big worries with generative AI is how it messes with know your customer KYC processes, that checks banks do to make sure you are who you say you are. We're seeing synthetic IDs, fake ones created from scratch, or stolen IDs being used, along with AI-generated KYC selfies, even videos designed specifically to trick these verification systems.
Yeah, there was a Payment Village article that actually showed a deepfake successfully getting past a bank's KYC checks. So this isn't just theory, it works. And what's really concerning is, while some of this tech gets shared openly for legitimate reasons like training AI developers, that same information immediately becomes available to criminals. It basically gives them an instant playbook on how to beat the system.
And if you don't feel like making your own deepfake, no problem. The dark web's got you covered. Reports say you can buy deepfake IDs online for as little as $15. And apparently, they're being used to bypass KYC at some big crypto exchanges, think Revolut, Kraken, and even traditional banks. So think about it. If you're that factory worker dealing with KYC for your bank account, Or the single career woman setting up accounts for your side hustle. This is the Matrix calling you out, right? That supposedly smart onboarding app your bank uses. It might be getting fooled by a $15 fake. This is exactly why these tech solutions can turn into really expensive distractions if you don't understand the game that's being played against you. The convenience comes with this hidden vulnerability. It makes you a target.
And it gets even more sophisticated. It's not just static images or short videos. Large language models, LLMs, the tech behind things like ChatGPT, they can create incredibly believable deep backstories, entire fake life histories. Imagine a fraudster applying for a remote job. They use AI to generate a detailed resume, fake references, a whole convincing personal narrative. It lets them get hired for remote positions, sometimes at multiple companies at once, and just collect payroll. It's a completely new type of sophisticated payroll fraud that's super hard to catch with old-school background checks.
Wow. It's staggering, really, the sheer inventiveness. And then you've got the spoofing and phishing. AI makes those phishing emails just way too human-like now. Gets rid of all the classic red flags, the spelling errors, the weird grammar, the generic "dear customer," which makes them much, much harder to spot. For people, obviously, but even for sophisticated security software. Get this. Harvard Business Review found that AI-generated phishing emails are 95% cheaper to make. 95%, which means high-quality, convincing scams are now within reach for basically anyone. From bored teenagers to organized crime rings. It's not just saving criminals money, it's letting them massively scale up their attacks.
And it's not just text. AI is being used to spoof voices, to mimic friends, family members on phone calls, trying to trick people into sending money. Imagine getting a call, hearing a voice you trust, maybe in distress, asking for help. You send the money without thinking twice. Only later you find out it was an AI fake. We've seen really striking examples, like AI-generated videos of company CEOs being used in California to promote fake investment opportunities, costing people millions. Or that really high-profile, deeply disturbing case with Taylor Swift deepfake pornography created using her likeness. It just shows how this tech can be weaponized for incredibly targeted, malicious harassment and exploitation.
It just begs the question, right? When AI can convincingly fake your loved ones, your boss, any trusted figure, how do you know what's real anymore? How can you trust anything you see or hear online? It's that big data, small minds thing again. Not that you're small-minded, but the flood of manipulated data coming at you is just overwhelming. It bypasses our natural BS detectors. For folks in intelligence, yeah, this is the new front line, fighting AI-powered disinformation. But for everyone else, it's this silent, creeping threat to your money, sure, but also to your identity, your trust, your peace of mind. So if AI is this powerful, who's actually winning? Is it the optimist, dreaming of AI utopia? Or is it the criminals, using it for scams with, again, little effort, making sophisticated fraud easy for people of all ages and locations? It really makes you question all that corporate virtue signaling, doesn't it? About AI's benefits, when the dark side is just running rampant, easily exploited like some wild, unpredictable solo in this digital symphony. Okay, now let's pivot and talk about the shadow economy of digital assets, crypto specifically. Because this is where that promise of financial freedom can really turn into, well, bait, leading you down a pretty dark path. We need to dive into something called zero-knowledge proofs. ZKPs. Sounds like something out of a spy thriller, right? And, well, kind of is. But with some very real and, frankly, chilling consequences.
Yeah, ZKPs are basically a cryptographic technique. It lets one party prove to another that something is true without revealing any information except for the fact that it is true. Think of it like, I can prove I know the secret password to get into a club without actually telling you the password itself. So for crypto users, this means they can verify a transaction like, prove they have enough funds to send money without revealing any details. Not the amount, not who's involved, nothing. They offer this promise of incredible privacy, privacy-preserving authentication, secure computation. It's genuinely a big leap forward for digital privacy tech.
Sounds amazing, doesn't it? Ultimate privacy. For investors maybe weighing up, crypto versus precious metals, this sounds like true digital freedom, an untraceable way to manage your assets. But here's the gut punch. They're also potentially a criminal's best friend. That Homeland Security report we looked at, it explicitly says ZKPs directly correlate to privacy coins. Think Monero, Zcash. And it calls these coins the ones that pose the greatest danger for illicit activity use. See, as law enforcement gets better at tracing regular crypto like Bitcoin or Ethereum, criminals are flocking to these privacy coins, the ones engineered with ZKPs to be inherently untraceable. Their use is way up. They're fast becoming the currency of choice for people operating in the darkest corners of the web.
And if you connect that to the bigger picture, yes, ZKPs offer powerful privacy, But where does privacy cross the line into perfect anonymity for crime? That's the fundamental tension here. We're talking about ZKPs making anonymous transactions on darknet markets easy, obscuring where dirty money comes from and where it goes in big money laundering schemes. They can be used to create fake proofs of ownership in scams, or even enable privacy invasion through, like, unauthorized surveillance, because someone could potentially access something without revealing who they are. They can also be used to mess with digital evidence in criminal investigations, making it incredibly hard for police to follow the money trail. And beyond that, ZKPs can be used in certain types of ransomware attacks, where the attackers demand payment in untraceable crypto, knowing they're shielded. So for investors, yeah, that crypto versus precious metals debate becomes really critical. Is one truly offering freedom? Or is the other just really sophisticated bait designed to lure illicit activity, especially with these new, hard-to-trace methods? The very tech that protects legitimate privacy can also provide the perfect cover for criminals.
And the darkest corners, they get even darker. We have to talk about crypto's undeniable link to human trafficking and the absolutely horrifying trade in child sex abuse material, CSAM. It's identified as a growing problem within the crypto crime world. And cryptocurrency is now the dominant choice for the buyers and sellers of this sickening material. This isn't just about financial crime anymore. This is about deep, profound human suffering being enabled by the anonymity that crypto can offer.
The Chainalysis 2024 Crypto Crime Report is very clear on this. It states unequivocally that crypto-based CSAM sales are growing. In 2023 alone, Chainalysis tracked over 400 CSAM vendor wallets, and they identified over 10,000 buyer wallets. 10,000. And what they're seeing is these criminals are moving towards instant exchangers, especially the ones offering privacy coins like Monero, precisely because they're harder to trace. And many of these wallets. They also show connections to darknet markets and fraud shops. It points to a complex, interconnected network of criminals.
It's just horrifying. And it really hammers home the immense human cost that can be hidden inside what might seem like low-dollar cases. Transactions that might not trigger alarms in a financial crime unit focused on multi-million-dollar laundering schemes. But the financial industry is fighting back. You've got anti-money laundering AML teams, financial crime analysts on the front lines. They're using advanced crypto tracing tools like Chainalysis Reactor, we'll talk more about that, and they're using the 314B process, which is basically a crucial way for banks and law enforcement to share information securely and quickly when they suspect money laundering or terrorist financing. It lets them connect dots faster without needing a subpoena for every little tip-off. They also look for specific red flags, right? Like buying certain types of computer gear that suggests setting up illicit servers, or subscribing to multiple VPN services to hide their tracks. And they dig through open source data, trying to piece together the puzzle. And the nonprofit sector is absolutely vital here too. Organizations like the Internet Watch Foundation, the IWF, they're a global leader. They confirmed over 275,000 CSAM web pages just in 2023. That's an 8% increase on the year before, showing how relentless this problem is. Then there's NCMEC, the National Center for Missing and Exploited Children. Their cybertiplin gets reports from the public, from tech companies. They've had over 82 million reports total, leading police to identify over 19,000 victims. And critically, organizations like ICMX, the International Center for Missing and Exploited Children, they've had huge success working to pretty much eliminate credit card use for CSAM, which was a massive win. But unfortunately, it also just pushed the criminals straight over to crypto, highlighting this constant cat and mouse game between the good guys and the bad guys online.
That's the real raw truth of it, isn't it? The credit card companies got wise, clamped down, so the criminals just pivoted, found new, untraceable ways to operate in the shadows using crypto. It's just such a stark reminder that even small, seemingly insignificant transactions can mask horrific human suffering. And it shows how innovation, if it's not properly secured, if it's not rigorously regulated, can quickly become bait. And this is where that shiny tech dream just peels away and you see the really, really dark underbelly. But it gets even worse. Let's talk human trafficking. And this particularly evil scam that's cost people billions, pig butchering. This is where victims, often lonely or vulnerable people looking for romance or maybe a hot investment tip, get groomed financially, sometimes for months. They build trust through fake online profiles, romance scams, and investment advisors then convince them to pour huge sums of money into fraudulent cryptocurrency websites that look totally legit.
The FBI's 2023 Internet Crime Report, the numbers are just staggering. Overall investment fraud losses jumped 38% to $4.57 billion. Billion with a B. And crypto investment fraud specifically, it surged 53% to hit $3.94 billion of that total. This isn't just numbers. This is people's life savings, retirement funds, dreams, just gone. Wiped out by these elaborate long con operations designed to bleed victims dry.
And the human cost behind those numbers, it's almost too grim to comprehend. You know that random text message you get sometimes? Mid-sentence. from a wrong number. That's often the hook. The first contact. These aren't lone wolves. These are large, sophisticated crime syndicates. They actively traffic people, mostly from Southeast Asia, and force them to run these scams from guarded compounds. Horrific places like KK Park in Myanmar. The people forced to run the scams, they're victim-y too. Kidnapped, coerced, tortured if they don't comply. It creates this nightmare situation where victims victimize victims. They're forced to carry out these scams, devastating other people's lives while they themselves are prisoners. And often, it's Chinese gangs pulling the strings, profiting from the scams and from ransoms paid by the victims' families, demanding payment in untraceable crypto, of course. So, for any of you listening, whether you're a teacher planning for the future, an artist trying to make it online, just anyone managing your money, this is why understanding the dark side of tech isn't just for spies and cops. It's vital for your own safety and the safety of others. Single ladies with side hustles, heads up. Here's how not to get taken in by the next shiny fintech app promising the world. That friendly stranger in your DMs, that random text, it could be the start of a devastating chain reaction, financial ruin, human suffering. It's a chilling reminder that big data, small minds, isn't always about the victims being naive. Sometimes the scam is just that good, that insidious, unless you know what to look for.
And fighting this, it absolutely requires strong public-private partnerships. It has to be a team effort. Financial institutions are critical, monitoring transactions, flagging suspicious activity proactively. Blockchain forensics companies like Chainalysis, they play a huge role, identifying the illicit wallets used in the scams, tracing the money flow across these decentralized networks. It's like digital detective work. And law enforcement collaboration, domestic, international, is essential. Sharing intelligence, making arrests, taking down these global criminal operations.
And thankfully, there are successes. Stories that give you a bit of hope show the fight isn't lost. In 2023, OKX, which is a major crypto exchange, worked directly with the U.S. Department of Justice. They managed to freeze around $225 million in USDT. That's a stablecoin tied directly to an international human trafficking ring. That's a huge hit to their finances. Also in 2023, there was a big Interpol operation led by South Korea, a truly global effort. They arrested 3,500 cybercriminals and seized $300 million in dirty money, including a solid $100 million in digital assets. These aren't just stats, these are major wins against absolutely horrific crimes. It shows that when everyone works together sharing info, using the right tools, we can start to dismantle these sophisticated global networks that have thrived in the shadows for too long. Okay, so we've laid out the problem, the deep pitfalls, the really disturbing ways digital innovation gets twisted for crime and exploitation. Now let's shift gears. Let's talk about the fight back, regulation, enforcement, what's coming next. Because, the digital Wild West, it's definitely getting some new sheriffs in town.
And they are starting to lay down the law. Seriously, we've seen some landmark court cases recently that are really drawing clear lines in the sand, setting precedents that are going to shape the future of finance.
Yeah, one of the most significant was the guilty verdict for Roman Sterlingov. He ran the Bitcoin fog service for a decade, laundered hundreds of millions from darknet markets. This case was huge because it was one of the first times blockchain analytics tools, specifically Chainalysis Reactor, were accepted as direct, hard evidence in court. To actually show the jury how the dirty money flowed, it really highlighted how powerful these tracing tools are. You can visually track crypto across the blockchain, but it also briefly showed the potential for mistakes. Another firm, CipherTrace, initially put out conflicting data about Bitcoin fog, but then they had to retract it, admitting problems with their own analysis, which just underscores a really critical point for investigators, right? These software tools, they're powerful, yes, but the results have to be backed up by independent open source tracing, by meticulous human analysis and visualization to make sure it's accurate, to build cases that stick. It's kind of like having two jazz critics review the same show. One loves it, one hates it, then one admits they misheard the chords. You need that verification to trust the evidence.
That's a really key point for building trust in this new digital forensics world. Then you look at the FTX case. Sam Bankman-Fried just got sentenced. That's a clear contrast, isn't it? Because fundamentally, FTX wasn't really about tracing super complex anonymous crypto flows or fighting some cutting-edge AI scam. No, FTX was basically just good old-fashioned fraud, a classic Ponzi scheme, really. It just happened to be operating as a crypto exchange. Bankman-Fried inflated assets, secretly moved customer money around, stole billions. Plain and simple. It's a powerful reminder, isn't it? Not all crypto crime is high-tech wizardry. Sometimes it's just straight-up old-school greed wearing new digital clothes. For investors listening, whether you're a millennial thinking about crypto or a seasoned pro, this case screams, do your homework. Just because it's got crypto slapped on doesn't mean the basic rules of fraud don't apply.
Exactly, and the regulators, like the SEC, they are definitely stepping up their enforcement game. Look at the proposed fine against Terraform Labs and Do Quan $5.3 billion. After their algorithmic stablecoin, Terra USD, just imploded. That stablecoin was supposed to hold its value through algorithms, not actual cash reserves. Its collapse just vaporized tens of billions of dollars. The SEC's action there sends a crystal clear message. If you operate in the digital asset space, especially offering things that look and act like securities, you are subject to existing financial laws, and the penalties for breaking them will be severe. That precedent really signals the end of the Wild West days for anyone thinking crypto is somehow outside the law.
Right. And then the founders of Samurai Wallet, Keon Rodriguez, William Lonergan Hill, arrested, charged with conspiracy to commit money laundering. Samurai Wallet was a mixing service. Basically, it pools users' crypto together, shuffles it all around, makes it super hard to trace who sent what to whom. They allegedly handled over $2 billion in illegal transactions, including, get this, $100 million straight from dark web markets selling illicit goods. This just shows the ongoing, aggressive crackdown on these crypto mixing services. Regulators see them as tools built specifically to enable crime. The message couldn't be clearer. If your main business is helping criminals hide their money, you're going to get caught.
It really illustrates this critical shift, doesn't it? The Wild West is getting fenced in. Law enforcement regulators, they're bringing out the big guns. And those lines between traditional financial crime and digital asset crime, they're getting blurrier and blurrier. This is where the matrix really starts to glitch for the bad guys. The tools they used to hide are being systematically targeted. The law is catching up to the tech.
So whether you're that millennial thinking about your next investment, or maybe a teacher just trying to secure your earnings and make sense of this digital world, these rulings, they're like your playbook. They're showing you who's trying to play by the rules and who's just, flexing their bad intentions. It proves that big data, small minds isn't always the case when law enforcement and regulators actually step up. These are real consequences for real wrongdoing, putting up crucial guardrails in this whole digital symphony.
The SEC especially has been really busy setting precedents with its enforcement actions just in 2024. It's signaling a very clear regulatory direction. For example, Geosyn Mining, LLC, charged for unregistered and fraudulent securities offerings, basically saying even crypto mining isn't exempt from securities laws if you're raising money like a security. CryptoFX, LLC. Hit with charges for a huge $300 million Ponzi scheme that specifically targeted Latino investors, highlighting how vulnerable certain communities can be to these tailored scams.
And the list goes on. Shapeshift AG, a Swiss company, charged as an unregistered dealer, paid a $275,000 penalty, sending a message to decentralized exchanges. Figure out your obligations. TradeStation Crypto, Inc., charged over an unregistered crypto lending product, paid $1.5 million. Making it clear, if you offer crypto lending or yield products, they probably fall under securities rules. We also saw Brian Sewell and Rockwell Capital Management, LLC, facing fraud charges. They ran a scheme that ripped off students of a crypto trading course for $1.2 million. Just awful exploitation within the crypto education space. And don't forget Hyperfund, a massive $1.7 billion fraudulent crypto pyramid scheme. Charges filed there too, just showing the unbelievable scale some of these scams reach.
Yeah, taken together, these cases really paint a picture of much stricter enforcement and growing regulatory clarity. Regulators are basically shouting from the rooftops, the basic rules, financial transparency, investor protection, anti-money laundering, they apply to all assets. Doesn't matter if they're digital or traditional. That whole idea that digital assets exist in some kind of legal vacuum, it's rapidly being dismantled.
Okay, so what does all this mean for the road ahead? What can we actually expect? Regulations, forecasts. How do we, collectively defend ourselves in this landscape that just keeps changing? Because the digital symphony, yeah, it's getting louder. And some of those notes are still pretty jarring. But the conductors are finally stepping onto the podium.
Well, we can definitely expect stricter rules for financial institutions, things like tougher Know Your Customer KYC and anti-money laundering AML checks, more detailed reporting on digital asset transactions. There's also a big push for more international cooperation. Because this crime is global, right? Illicit money flows across borders instantly, so countries need to work together. We might also see specific regulations targeting decentralized finance DeFi platforms, requiring them to get licenses, put in risk controls, which kind of challenges the whole decentralized, unregulated idea. Really, the big goal is to get more uniform rules across different countries, get clearer legal status for things like smart contracts, and really tackle the problems posed by those privacy coins we talked about.
I bet regulatory technology, RegTech, is going to be huge in policing all this, right? Using AI and blockchain maybe to automate identity checks, transaction monitoring, reporting, making compliance faster, maybe more accurate than manual checks. And yeah, the goal is getting everyone on the same page, legally speaking. Uniform rules, clear status for smart contracts, and dealing with those privacy coins.
Looking ahead, forecasting, well, the legitimate use of crypto will probably keep growing, expanding into more mainstream areas, but unfortunately, its use for crime will likely continue too. Criminals adapt, right? They find new ways around defenses. However, the good news is that tracking tech will also keep getting better. More sophisticated blockchain analysis, AI spotting patterns, making it harder for criminals to stay anonymous. Regulatory frameworks are going to evolve fast. We'll see updates to AML, CFT, combating the financing of terrorism rules, specific regulations for NFTs, stablecoins are probably coming. And critically, expect a huge increase in those public-private partnerships. Government agencies and private companies sharing info, coordinating efforts. That's seen as key.
And maybe most importantly, there's this push, hopefully a big push for more education, more awareness for consumers, for businesses. Whether you're that millennial tradie, and yeah, you are probably the next target for slick money apps, or a bus driver planning retirement, or a factory worker managing your finances, understanding these trends is absolutely crucial. Don't let these solutions become expensive distractions. You got to know the game before they try to play you. Don't just trust every shiny new fintech app because it looks cool or promises easy money. Dig deeper. Ask the hard questions. Understand who really benefits.
And there are still vital areas that need ongoing study, ongoing vigilance. Researchers have to keep checking. Are the current rules actually working? How exactly are new technologies changing the criminal landscape? Where are the gaps that criminals might exploit next? The role of digital identity is huge. How can we verify who someone is securely online without creating massive honeypots of data? Developing better cybersecurity, understanding the true economic cost of these crimes. It's all critical. We need better forensic tools, better analysis of criminal behavior, and definitely stronger international police cooperation to deal with these borderless threats.
And it's not just about stopping the bad guys, is it? It's about finding that really tricky balance between privacy, which we all value, and transparency, which we need to fight crime. Plus, we have to grapple with the double-edged sword of AI and machine learning, how they both help criminals and help fight crime. And think about the ethics of all this increased surveillance and data collection that comes with trying to monitor everything. It's a really complex dance.
This is where, as you put it, the jazz lounge meets the war room. It's not just up to governments or tech companies anymore. It has to be this collective, unified effort to make the digital world safer. We've seen that huge increase in public-private collaboration. Initiatives like Operation Shamrock, launched back in April 2024, Homeland Security called it the largest organized effort ever in the U.S. to fight illicit digital currency use. It just highlights how vital uniform information sharing is. Across private companies, public agencies. When investigators pool their knowledge, pool their resources, they get better results. It makes it harder and harder for criminals to operate unseen. And that means you, the consumer, being informed, being discerning. That's your first and honestly your most powerful line of defense against the digital Wild West.
So we've taken a pretty deep dive today, haven't we, into this digital whirlwind. We've seen the undeniable promise of innovation right alongside the really stark reality of how it gets misused. Financial crime, deepfakes, even horrific human suffering. We've tried to unmask that illusion of choice in some of these solutions, shine a light on who's really winning with these new tools and who's maybe getting left behind, or worse, targeted. The fight to regulate, to protect, it's ongoing, it's complicated, and it's absolutely essential. It really is like this constantly evolving symphony, new, beautiful melodies emerge, but so do those really jarring, ugly, discordant notes.
And it just demands constant vigilance, doesn't it?
Yeah.
And informed action from all of us.
So here's the final thought for you to chew on. As this digital world just keeps accelerating, how do you define real financial freedom for yourself? And what steps are you actually going to take to protect it? In a world where innovation can flip and debate just like that, are you falling for the illusion of choice? Or are you really taking the time to understand the game being played? Keep asking the tough questions, because in this wild, ever-evolving digital symphony, staying informed, that isn't just about knowing stuff. It's your best defense against those discordant notes that can empty your wallet and wreck your peace of mind.